Let's take a look at those numbers closely now with Martin Smith, who's eNCA Capital's portfolio manager. Martin, as always, many thanks for your time this afternoon. Let's start with the overall markets. I've been saying over the last couple of days now that it's been a very volatile week for global markets because of what's happened, a lot of what's happened in China in terms of tech stocks, and they're cracking down on tech companies. And that really filtered through to emerging markets like ours, who've got investments like Tencent and Naspers and Prosus.
Yeah, you're absolutely correct. I think there was a lot of noise, and we always sort of take our cue from what's happening offshore, but we have to look at minutes out of the Fed. You have to look at US GDP numbers, like you said, the Chinese regulators coming in. So there was a lot of noise coming through, and specifically on our exchange, if you look at how much Naspers and Prosus make up of the JSE, and the impact that we saw from Tencent being sold off as aggressively as it did at the beginning of this week. So there's a lot to digest. We've seen Tencent subsequently recover slightly, but a lot of things kind of still up in the air, I guess. I'm hoping we're at the end of the regulatory cycle we've seen in China. But again, I think there's still global tailwinds. If you look at what happened out of the US in terms of their GDP print, minutes from the Fed, it looks like we're going to have stimulus for longer, and the music will continue to play.
Let's talk about some company news, and it was a decent day for a lot of the companies that reported today. Let's start off with Nampak. They also put out a report, speaking rather about some solid earnings from them. I mean, what did you make of what they had to say, particularly because of the business that they're in?
Yeah, so I think it was quite a decent update. They spoke around restructuring and cost saving initiatives and just better trading, a better trading environment that led to them having improved results. Revenue is going to be up about 24%. They also spoke a bit about debt covenants and things like that. And given the debt that company has on the balance sheet, I think investors were quite pleased with that. So you saw the share well north of 10% during the course of the day. Again, I think it's a company that maybe fundamentally I'm not massively in favor of the business, but I think if you look at how cheap this is, and I think it speaks to a lot of companies offering a lot of good value on the JSE and not a lot of good news needed to move the needle quite significantly for them. So I think Nampak falls into that boat. And again, I think there's lots of value in the kind of small to mid-cap space in the JSE at the moment.
Right. What do you make of EOH? I mean, they've been through the most in terms of the corruption related to, or alleged corruption related to government contracts. They've been cleaning up, taking former executives to court. But amidst all of this, including COVID-19, they remain profitable. I mean, would you call this a solid business?
So we've got to remember EOH has been quite a long road with this business over the last kind of 5 to 7 years. It was 160 Rand stock not so long ago, and their business models changed somewhat. I mean, they were very, very acquisitive, buying up IT businesses all over the show. And then you said like they had the kind of alleged corruptions and awarding of supposedly inappropriate contracts. So there's a lot of things going on, and they had all of these different IT businesses that maybe didn't fit together that well. So it was quite a difficult situation. The new CEO found himself in about a year and a half ago, and he's kind of come in, tried to clean things up, tried to get things aligned in terms of all the businesses they've had. So I think they're working hard on it. It's taking a little slower than they maybe anticipated initially, but progress is there. The business looks quite cheap on a fundamental basis. So if you're patient and if you're willing to stomach the risk and volatility, I think it could be quite a good entry point.
Martin, as always, many thanks for your time. That's Martin Smith, who's eNCA Capital's portfolio manager.